Hey guys, what's up? What's happening? Welcome to this channel. In today's video, I'm going to be walking you down to my number one tip in trading the forex market. Whenever I want to get into a chart, the first thing I always do is ask myself, are the institutions involved in this trade? So I'm going to be showing you how to track institutional trading. First, if you want to win all, let's say 97% of your winning trade, you have to be able to track the institution in the forex market. Because if I come to the first market and I'm like, what's the market doing? What's happening? What's happening? And I see something like this. The market is having a consolidation phase, something like this. The next thing I want to do is I want to wait because I know what the institution are doing. They are accumulating orders, as at this zone. The market is neither going up or coming down. This is a ranging market as at this zone currently. So what I do is I ask myself one simple question: are the institutions involved in this trade? No. So I just keep waiting. So I'm going to be showing you before the end of this video. Just stick close. I'm going to be showing you how to pinpoint that zone where the institution get involved, the formula to use. I'm going to be walking you through that strategy. So let's move on. Now, first, let's understand what institutional traders. What are institutional traders? Institutional traders are intended to manage big banks for financial institutions and organizations. They are known as smart money, while the retail traders are known as dumb money. Now, for you to be able to be profitable, you have to be able to follow the smart money concept, which I'm going to be showing in this video. So let's move on. In order to always win your trade, you have to be able to use the institutional trading strategy to win all your trades. Now, by doing so, you have to be able to spot the institution in the market. You have to be able to spot them in the market. If you're able to spot the institution in the market, fine. You should know what you're doing. It's either you're buying or you're selling. You should know what you're doing as at that zone. Now, let's move on. In this video, I'm going to be sharing with you it's going to be very short, very, very short. Because why? I don't want to get caught at the end of the day. So let's move on. How to identify the institution in the market. The number one way I identify the institution in the market is through institutional candles. Institutional candles, that's the number one way I use in identifying the institution in the market. Now let's take for an example what's happening here. We see price doing something like this. Okay. So I see accumulation of orders here. There's one thing I always do. I always look for the last candle that ran out the liquidity to the downside. So let's identify the last candle. This is the last candle that ran out the liquidity to the downside. Now they accumulated the double bottom here. I always tell my traders, my mentees in my trading platform, I always tell them to always avoid double bottoms like this, because while we're taught as retail traders, we're taught to always trade with double bottoms and double tops. Double bottoms and double tops. There's another one here. This and this. Let me use this. So triple bottoms, triple tops. The institutions, they know what retail traders, how they think. And number one way retail traders think is whenever they see the double bottom, they'll be like, wow, this is a double zone, this is a good zone to get involved. Yeah. As at this case, if there was a favor, it actually favored them in the market. The market actually moved up from this zone. But guess what? This whole move here was just to take out the liquidity that was resting here. This whole move here was just to take out the liquidity that was resting here. So the initial move of this market was to take out the liquidity that was resting above this zone. So they stopped out. Some persons were entering here as a zone here, thinking it was going to be a strong zone. sellers were selling here and buyers were equally what buying here. So the market went in the favor of the buyers and stopped out the retail traders that were selling here, took out the stop losses that was what above here. So when the market eventually went up, this is what I will do. I told you about the last institutional candle that ran out the liquidity to the upside, and this happens to be it. So see what the institutions they did. They came down to this zone. Don't forget, whenever I'm able to spot the last institutional candle, what I'm targeting is where the liquidity is. If you haven't watched the video where I talked about how smart money run out liquidity, you can check the description below. I'm going to be leaving it below. So what I do is I spot this zone. Why? I know there's liquidity here. This double bottom. Retail traders were here. I told you they bought here. They bought us at this zone here. And the market went in their favor. But their stop losses are going to be somewhere here beneath this. So am I going to be risking a 1 to 2, some 1 to 3, just like that? 30 pips, 50 pips stop loss. So I know the stations know, like I said, the stations know what retail traders are thinking. So what they did now is they came down. There was liquidity here. They stopped out some persons that were what buying. Some persons would have even jumped in here and think this was a breakout without getting a proper pullback in this zone. So they stopped out these guys. Remove this. Came down, went back, and generated what liquidity as at this zone here. Put this here. Guess what? They came back and tapped into this last candle. Let me bring this out. See, that run out the liquidity to the downside. So, but if you want to buy, you can just buy here. You can get involved and buy here and ride it up to this side. Your target should be here. This is institutional trading as I'm showing you now. So you can just target here and take that first. But I wouldn't do that. If I want to buy here, this is what I'm going to be doing. I'm going to wait for price to come to this last institutional candle that took out money to the upside. And this happens to be it. They tapped into it. This way I'll be getting my entry here. And I'll be riding it to the downside. See, when they came down here again, they generated more liquidity here. More liquidity here, went back up and took out. This is another entry zone. There's still liquidity here. So I told you, whenever I see a double top, this is a triple top rather, a triple top or a double bottom or a triple bottom, it's actually zones for institutions to come and run out the liquidity that is resting there. So I'll be getting involved in this chart here and riding it to the downside. So I think I'll be taking my take profit somewhere here and take this out. So this guy's actually got stopped. My take profit is going to be somewhere here. See, I would have hit my target. So institutional candles are one way I use in identifying the market. Institutional candles are one way I use in identifying my entry, and also spot institution the trade. I wouldn't buy when I'm seeing something like this going up. So what are we doing is, I knew the intention of their move was to take out the liquidity here. So what are we doing is waiting for them to run out the liquidity to the top side, and also look for a good entry in this last candle that took out the money to the upside. That was where I'll be waiting for them to come out and respect, which they did, and I'll be riding it to the downside. Now let's move on. The number 2 is understanding institutional price movement. This is where I'm going to be talking about the BBS and the SBB formula. Now the BBS talks about buy before sell. Take note, institution, their number 1 concept is whenever they want to buy, they always sell, and whenever they want to sell, they always buy first before doing that. Now look at what was happening here. Like I said earlier, the institution came here, their whole intention was to sell the market, but what did they do? They actually bought first. Sorry, They actually what bought. They took it to the upside and stopped out the retail traders that were there. So they actually bought first before what they sold. And take note, they did so many things here. They bought, they took out these guys, they came down and generated more liquidity here, went back up and respected the last institutional candle, whilst also they took out the liquidity that was here also, and before they came back down and generated more liquidity. So some persons will be buying here. Take note, I told you about retail traders. What they always think is seeing double tops and double bottoms like that. So some retail traders are going to be getting involved in this chart as at this zone here. Let me take this out. So retail traders are going to get involved here and thinking the market will ride to the upside. And guess what? They got stopped out. So you have to be able to understand the intention of the move. If institutions they want to buy, they always sell first before they buy, and if they want to sell, they always buy first before they sell. Let's take as another example here. Let's go to H4. Now see what happened here. The intention of this whole move was to sell the market to the downside, but guess what? There was a double top here. What did the institution do? They ran it out. They went back up here, generated liquidity at this bottom here. This happens to be what? A double bottom. So generated liquidity above also. Let me take this out. They collected these guys out. So liquidity is here. Liquidity is here. So what did they do? They bought. So whenever I get involved in this chart and I see liquidity, that the smart money has what taken out liquidity to the upside, I know they're going to be taking money what to the downside. So actually the formula plays in here. They've already bought. So what they're going to be doing is what to sell next. Guess what? They sold it to the downside. They took the market to what? To the downside. So if I want to get involved in this chart, this is where I'll be getting involved. Here. So my take profit will be here. Don't forget there's equally a zone here. This is a double bottom. This happens to be a double bottom. So they took this out and equally took this out. But their first intention was to buy. So whenever I get involved and they say institution, buy first. Whenever I see a consolidation like this, it's not a good zone to get involved. Institutions are actually what accumulating orders. So what you do is just avoid the chart as at that moment. You just wait for it and see what happens. And initially you see a bullish candle that goes up and took out the what liquidity from the top side. So this is gone. So your intention now is this. There's liquidity here. There's also liquidity here. So what you should be targeting is what? A sell. I see some folks be like, wow, this is a breakout. Let me get involved here and start buying to the upside. Whoa, that's wrong. That's wrong. That's trading like the retail traders. Because why? They know that some stop losses are here. They know that some stop losses are equally here. So what they do is they're going to be running it out. So if you want to win like this institution, what you have to do is wait for them to get involved. And what they did here was to buy. So you should be thinking of what? Selling. They've taken out the upside liquidity. And you place your stop loss somewhere here. Somewhere here. So run it what to the downside, and guess what? That hit your TP as at that zone. So let's move on. The third one is to identify what the idea behind the move. What's the idea behind the move? The whole trading strategy about Forex is the running out of what liquidity. The running out of what liquidity. Now I talked about a video, 5 steps to finding your own what trading strategy. I'm going to be leaving the description also below. So I talked about how to know what the institution do in that video. So what they do is they stop out what retail traders. The institution do not want retail traders to what to be profitable in the market. So the intention of all this move is for them to be the only ones in that what forex market. So all you have to do is to what trade with them so that you can be able to go profitable in the forex market. So what we're going to be doing here is the idea about the price movement is to stop out with retail traders. Since we know they want to stop out retail traders, you don't want to get involved in zones like this. In zones like this, let me use this as an example. This is it. So what happened here? There's liquidity here. There's liquidity here. So what did the retail traders do? What did the institutions do rather? They took out the liquidity from the downside. So what happened? So I want to talk about this. I talked about the first time, the last candle that ran out the liquidity was to the downside. This is it. It was respected here. So if you want to get an entry, you can get in here. This is a morning star. Okay, let me quickly change this to something everybody can easily relate to it. Okay, so this is morning star, and actually happened on the last institutional candle that took out money to the to the downside, and it was expected. So what institutions they do is either they respect 50% of the last candle that took out the money to the downside or the opening price of it. If you haven't watched the video where I talked about candlesticks, you can go on. I'm going to be leaving the description below also. You can just click on it and just get involved, or you can just go to trading with Rena to get the institutional and candle patterns. So what did they do? They respected it, and since they've taken the liquidity from the downside, where is the next target? The upside. Guess what? I'm going to be getting involved in this chart here. I'll be entering here, and where will be my target? It will be my number one target, and number two. So sorry, let me bring this down. I choose to use this other block because this is the only relevant one, which I think price is going to be respecting. So I would have hit my TP at that zone. So that's all for this video. Don't forget to leave a comment below in case you have any question for us to give attention to. So see you.